We getting paid. All about the profits, ain't here to play. Impact the slave, markets all day. All about this all, yeah, that is my like Mario business. See Joe is the beast, go get her. See Downs fire, see Rob's the next. Yeah, kill every pip like a Kendra. Gotta give a million, it's render. Niggas get your hand on the trigger. DeLorean Nation going bigger. Pumping up to 50 like I'm Tigger. Yeah. 10 pip, 20 pip. I'ma get intricate. Let it rip. Profits. On profits. I'm flowing, I'm riding them all. GBP, that is my goal. Count these pips. Ice on my wrist. I'm a young ball. 10 pip. 20 pip. I'ma get intricate. Let it rip. Profits. On profits. I'm flowing, I'm riding them all. GBP, that is my goal. Count these pips. Ice on my wrist. I'm a young ball. Listen very closely. All my faves are damn worthy. Getting to this bread. Kaylin, Nick, can you hear me? Abel got that sauce. Market makers hella thirsty. PK, market execution 30. Yeah. VKU, I'm a road dog. See, blessed with A1s and it's on go. Stressing, I'm not, well, I gotta pause. Below 2, yeah, I gotta think job. Trip 4 steps, oh my god. Bigger got location, space boss. Play shit for the yellow with a red cross. Polo one province like a playing golf. 10 pip, 20 pip. I'ma get intricate. Let it rip. Profits. On profits. I'm flowing, I'm riding them all. GBP, that is my goal. Count these pips. Ice on my wrist.
Working a man in the wall. Yes, family. What's going on, y'all? Good morning, family. It's your boy Abel checking in for the one time. Super excited to be here with all you guys this morning, as usual. There's another day to get better, man. I said we got Sandra in the building. What's the word? We got Tyson, Mike, Kayla. How are you doing? Isaiah in the house. We got Margarita in the building off the ground. What's up? Free Zone in the building. What is going on, y'all? Appreciate y'all for being here with me today as well. What's the word, Austin? Appreciate y'all, family. We live. I know I'm a little late today. By a few minutes. Gotta blame wifey for that. Wifey had me out at Target early in the morning. Y'all know how that went. These mother junkin' Target runs be crazy. Especially early morning Target runs, man. Like, what? I'm gunning. Wifey definitely had me in Target, family, so I'm a little late, but we here. And we live. And we excited to get to the bag, man. Come on now, family. Go ahead and smash that like button one time for your boy. Appreciate y'all so much. But, man, I'm excited, y'all, because we've been having a very, very good time. We've been having a phenomenal past few weeks, actually. And I want us to continue with this momentum that we've been having, with these trades that we've been catching, with these bags that we've been lacking, with the mags that we've been clapping. Oh, I turned into a rapper real quick. But I really, truly want us to continue to do what we've been doing, family. Showing up, getting 20, 30 pips, or 20, 30 points, closing the partials, and then letting the rest ride. Making that adjustment alone. Understanding that these markets have been extremely choppy. And making that adjustment of only going for 20, 30 points really has been game changer. Just because now we've been catching consistent wins pretty frequently. And I think it's time for us to continue to do that. Absolutely. All right, let's see what we got here in the chat. Bootcamp day one went crazy. Yeah, bootcamp day one was fire, man. Big shout out to all you guys that did participate in day one of the bootcamp. That's going to be with me for this entire week, family. Because last night's call was OD. Like, again, if you guys don't understand the value that I'm providing in these boot camps, then I truly, truly feel sorry for you, because it really is pretty insane the amount of value. And last night's call was all about mindset, disciplines, and habit creation. And we went over a shit ton of stuff last night. Like, we went over a shit ton last night. Lasted for around an hour and 45 minutes to call. Everybody that was a part of the boot camp day one, you should already have the recording in your inbox, in your email. It was sent out last night, so you can always rewatch that if you guys weren't able to watch the whole thing. Even if you were a part of the live session, I need you guys to rewatch that session. Rewatch it a few times. So we talked about a lot, bro. But let's see, Mr. Take Profit in the building. Don't let it happen. Hey, blame wifey. Lambo said always blame the wife. That's the best excuse to have. Ain't no better way to get out of things than blaming it on wifey, to be honest with you. But this was actually wifey's fault. I literally told her, I'm like, listen, I got to do a call in an hour. Will we be back home by 8:30, the latest? She's like, yeah, no, we just got to get a couple things. Yeah, all right. Should have knew how that went. Got scammed. I feel like she scammed me of my time. But we here. And we live. And we're ready to go ahead and do what we've been doing. And that is hopefully to come in and just follow our rules. That's all we can ask for, family. Right? All we can ask for is come in and just follow our rules. Right? We don't even want to come to the market and say, man, we want to come in today and actually win. Like, no. Right? Because we're putting too much pressure on ourselves when we're trying to target after or go after a win. What we need to focus on and prioritize is just being disciplined, following our rules, following our plan. So every day, I don't care about the win or the loss. What I want to make sure that I do is that I'm being disciplined enough to follow my rules. And if I'm able to be disciplined enough to follow my rules, I'm giving myself a higher probability of actually profiting for the day. Right? So it's doing those little things, guys, right? Like focusing on the strategy, the system, the discipline behind it all can in return turn into profits. But when you solely focus on the profits and you come in every day like, oh, I have to make this much money. See, now it gets easy for you to make bad decisions and break some rules in order to get that money. So focus on the disciplines, focus on the strategy, and then hopefully if the trade just works out in your favor, then you get the win. That's what really we need to focus on for sure. Right, but I see we got my boy Devin in the building as well. Just appreciate you for being here, family. But like I said, guys, it's been a very interesting past few weeks. This week has really started off on a good note. Yesterday was an absolute banger for us. We ended up calling out a couple trades. 2 positions, I believe, we took yesterday. And both of them played out beautifully for us. Ended up securing around 40 points on the first trade, around 30 to 40 points on the second trade as well. Both of them did come back and hit our runners at break even, but before the market turned around, we were able to secure at least 30, 40 points on both of those positions yesterday. So it was a really good session yesterday. Really good trading session. And now let's see if, today can also produce similar outcomes based on us just following our rules and being disciplined. Okay? So again, I'm excited for this, and I'm excited to see what we can get from this. But in the meantime, in between time, let's go ahead and take a look at these markets real quick, right? Because right now we are seeing gold really gaining some strength right now after essentially taking out London open lows. Now we're starting to see a little bit of a rebound back to the upside. We also took out a level of support, a level of structure, whatever you want to call it. Ever so slightly, we spiked below it. But I do kind of like this reaction that we're getting here, right? If this can hold on the 1 hour time frame, there is a possibility for us to actually see increased demand here for gold. So we'll see how this continues to form, how this continues to play out throughout the session. But I'm liking how this is forming now. Right? We swept below this level of support slightly. Right, current 1 hour candle took out the low of the previous 1 hour candle. We immediately flipped back bullish, and now we took out not just the low of the previous 1 hour candle, but we also now flipped bullish and took out the high. That is a sign of demand. We are seeing increasing volume as well for the buys. Also another sign of demand coming in for gold. So if this does form and closes at a 1 hour engulfing, supported by volume, that can be interesting. That could be very interesting. So we'll have to see if this does continue to form here and play out. But I think there's a good chance that we could see some demand here. Possibly. You know, this level of structure right here that we're testing and that we're playing off of is a pretty significant level as it is. So we'll have to see how this continues to form here. I wouldn't be opposed to us taking out this, you know, buy side liquidity above these highs right here to fill all these wicks. I wouldn't be opposed to that at all. If that's what the market gives us today, then that's what we're pretty much going to play. You know, play the target up to these highs. If this holds the way it is, which I'm pretty sure it will. We have about 10 minutes left on the hour, so I'm pretty sure it should close like this. And if it does, then yeah, I think there is a good opportunity for us to possibly go ahead and start taking out all this buy side liquidity here. So that's what I'm looking at for gold. Obviously, if the market doesn't do that and it just flips bearish, right? And if this 1 hour candle that we see here gets completely erased, then we are clearly just so much selling pressure just came in, is dominating. Then at that point, we'll just target the lows. But based off current price action, I'm favoring the buys until we take out this 1 hour candle that we're on, and then I'll favor the sells if that's what happens. So yeah, we're gonna take it for what it is, man. We're gonna let the markets dictate what they want us to do here, and then we'll make some decisions based off of price action. So that is my thoughts here on gold. Let's take a look at indices. Indices have been very, very choppy for the past few weeks, or not past few weeks, but at least for the past week or so. We have been kind of in this choppy range. Again, I'm still a fan of more upside here on indices, but to be fair, I have been seeing a lot of headlines lately that have that are really showing, or are more so saying, that a massive correction here is very possible for our stock market as a whole. What's Nvidia's stock? So I really want to see how this continues to play out, because there are people now starting to say, man, we could be seeing a top here soon. We could be seeing a top here soon on the NASDAQ, on the S&P. It's possible. I don't know if I'm there just yet. I think I'll personally still prefer to just look for continuations to the upside. But there have been a lot more people talking about this bull run that we've been in for a short period of time coming to an end. I don't know if I'm there just yet, but it is things that are, are being spoken about. So we'll see. Again, I still personally like the upside, so I still want to look for reasons to try to buy this, and we just gotta be patient and see what happens. We are still about 30-40 minutes out from the open. I'm not gonna trade this at all until the open. The only time I traded this pair, or I traded an indice before the open, I ended up taking 2 losses on it. So I ain't taking no trades until after the open on the NASDAQ or the S&P or US 30. That's at the very least thing that I could do. So I'm chilling for now. But again, I do think there is an opportunity for more upside here on the NASDAQ coming up. We'll just have to see where price is at after the open. And if the opportunity is still there, we'll take it. If it's not, then it is what it is. We'll leave it alone. But in the meantime, family, how are you guys feeling though, man? Because that's what I'm looking at. You guys know I really only focus on gold and the indices mainly. I don't mind looking at any other pairs for you guys. But those are really the things that I've been focused on. In terms of the dollar really has gained some strength yesterday, especially off of the backing of news. It did push us back up to the range, but now we're seeing a lot of selling pressure also coming into play here at the end, or at least the beginning of New York session. And it's kind of tough to kind of go against this little bullishness that we've been seeing here. I think the best thing for me to possibly do as of right now is to possibly look for more upside here in dollar until proven otherwise. Because this market has been, it has been for the past week or so, just constantly moving higher, higher, and higher. Now we are getting into areas of interest that could possibly bring some some dollar weakness, right? Maybe up here at this resistance or this, supply zone up here at the highs, there is an opportunity for price to finally start to give some way up there. I mean, honestly, anything above this level right here, we can start to, can give reasons, a sweep of this level at 105.57, which we did, could be an area that we see, selling pressure come in, right? So where we're at does have the potential for it, but I still think I want to ride with what this current micro trend has been, and that is still continuation. So I wouldn't be surprised by a little bit of a sell-off, but then either way, I would like to see us push, higher to the top end of this range. I think that would be, in my opinion, the best case for today. Now, if this thing just falls and we do end up taking out previous low right here, then at that point, okay, now I'll be like, you know what? There is probably a great chance that we do go ahead, start to roll over, and then we could target down to the lows, right? But we're not there just yet, right? Based off structure, based off of every indicator that I'm using, anything that I have, looking for these continuations still is probably not a bad idea until we take out the lows, and then I'll just flip my bias and start to write out the sells. But I want you guys to let me know what you guys feel, family. How do you guys feel about these markets right now? What are you guys looking at? Talk to me nice, family. What are you guys looking at? You guys looking at gold, indices? What do you guys think about the dollar? Let's really start this conversation real quick. Let's start this conversation. Let's come up with a common ground so that when we are ready to take these trades, everybody's on the same page. So what you guys thinking? Let me see what we got here. Powell speaks at 9:30 and Jolts is at 10 a.m. Both are EST. Yeah, we do have that. That is a fact. That is a good point that you brought it up. We do have Mr. Powell going to be speaking today. CPI for the euro also came out a couple hours ago. They kept it at 2.5, or it came out as expected. But again, we do have Mr. Powell speaking at 9:30. We have Jolts job openings reports at 10. Both of those can definitely bring some volatility, especially Mr. Powell opening his mouth right at the open. That's kind of interesting. We'll see what that does, how that reacts for sure. All right, but let's see. I was bullish on gold, but no entry. Yep. Let's see. Powell speaking same time as I just said that, right? Yeah, that is kind of interesting to see that happen. I hear French and UK elections this week. Should be some volatility in those markets. Absolutely. I agree with you. Good day, family. Day one of the boot camp was fire. Mindset, discipline is everything and not as simple as you think it is. Must be intentional. Abso-freaking-lutely, Linda. Again, last night's boot camp was crazy. The amount of value that we talked about, that we gave, that was given, just from a mindset perspective, right, was insane. But I'm excited about tonight. Right, today we talk about fundamental analysis. Today we really start to get into stuff that y'all really want to know, right? Fundamental analysis tonight, technical analysis tomorrow, management, trade management, risk management, money management, all the management aspect of trading, all is going to be on Thursday. And yeah, what's crazy actually, now that I think about it, family, tomorrow being July 4th, and I'll obviously update you guys, but I forgot tomorrow's July 4th. I'll definitely be live tonight with you guys to talk about fundamentals, but tomorrow we might have to reschedule tomorrow, to be honest with y'all. But I'll let you guys know. I'll talk to you guys privately about it. All right, but let's see. Abel, I'm using Apex TradeAvate connected to TradingView. Is there a way to copy trade when trading on TradingView using TradeAvate? I looked on YouTube and couldn't find anything. That's a good question. In order to, it's kind of I don't want to say it's hard, because really it's not, but you're gonna have to use a third-party copy trader to do it. All right, or if you just trade directly on TradeAvate's platform, I think they have a built-in trade copier. I'm not sure if TradeAvate has one or not. I'm not sure if they have it or not. But the best way is probably just through a third-party trade copier, which I'm not familiar of one personally. I know that there are some. There are a ton actually. But if you're trading on TradingView, and to copy trade from TradingView to other accounts, and that I'm not truly aware of. When I was copy trading with TopStep, I was doing it through TopStep X, which they have a built-in trade copier already. I don't know if TradeAvate itself has a built-in trade copier. So you're going to have to leverage a third-party software to do so. Let's see. Hey, boy, I bought the bootcamp yesterday during the time he was teaching. How do I gain access to the next session today? You will get an email. You should have gotten an email about yesterday's call, Daquan. Let me know if you haven't got it, but you should have gotten an email of last night's call. But today you'll get an email as well. All right, you'll get an email about 2 hours before we go live, so around 4 p.m. Eastern, 5 p.m. Eastern. You'll get an email with all the details that you need in order to access the call, which is pretty much just the Zoom link, the Zoom information, the Zoom passcode, and all that good stuff. So, all right, let's see what we got here, though. This is the ugliest I've seen the IDEX. Okay. Shout out to you, King City. I see we got Tony in the building. We got Rubina in the house as well. What's going on? Lokesh. Lokesh is in the building. What's going on, man? Good to see you in the chat. Carlos in the house as well. Good morning to you, my brother. Let's see. You say AUD USD sells. Let's take a look at AUD USD. Damn, this market has been so choppy. Look at all this chop. Look at all this chop. That's a lot of days there. That's, golly, 1, 2, 3, 4, 5, 6, 7, 8 weeks of just nothing but chop. 8 weeks of nothing but chop. That is super, super disgusting to trade into. But talking about the sells here, do we agree with the possible sells? I mean, you can possibly say that because of this move here. Maybe this little break of structure play can possibly produce another leg lower here. I could see that. But us being within this range right here, look at this chop within this bigger chop. This can honestly go either direction. So I see the possible sell, because we are seeing some weakness come in overnight, essentially. But I also see reasons why this can also possibly buy up too. We now came into an area of interest right here that could truly cause more upside here. So I can see both reasons, and this is why I typically hate trading within the middle of ranges like this, right? Trading in the middle of a range like this is definitely super annoying, just because the market could really go either direction. So I see the reasons for a sell, but I also see reasons for a buy. And for that reason, I'll personally just leave it alone. That's just me. Let's see, ball gold at the bottom. Your views? Okay. Yeah. If you go ball gold at the bottom right here, that's a nice play. Then we just got a nice strong 1 hour closure as well. Again, I'm favoring buys right now. I'm definitely favoring buys for sure on gold. Look at what we're seeing here, right? We went from creating this lower low, lower high, lower low, to now seeing the market go ahead and shift in structure here, right? We just created a higher high. Now, if we can get this pull back down, maybe within this fair value gap right here, right around 23.32s on futures pricing, that could be a play. That could be a play. So now keep us going to the upside here. I wouldn't be opposed to that. Again, I like it. As long as your stops is below the low, you should be good no matter where you enter. But for me, targeting this fair value gap probably just makes the most sense. Tap right into this level, and then from there, start to look for more upside. I think that would be best case scenario here. So I want to continue to let this play out. We're not going to rush anything. We're not going to force anything. But if the market does push back down, we will be ready. We will and we shall be ready to go ahead and get involved. And then I would like to target to the upside. All right, so a setup like this is probably not a bad idea for today, in my opinion. In my opinion, of course. So we'll see. We'll see how this stuff plays out, man. I'm actually going to set an alert, so in case price does start to get down here, we can be alerted on that, so that we can be prepared. So we'll see. We shall see. Let's see. I didn't get an email at all. Let me double check. I'll double check my list, Freezone. I got you, bro. If you didn't get it, then I might have, for some reason, overlooked adding you to the list, which is my apologies. But I'll check it, and if I didn't add you, which I'm pretty sure I probably didn't if you didn't get the email, I'll send you an email today with day 1 of the boot camp, and obviously the information for tonight's call as well. I'll send it to you. I got you. You doing the boot camp on YouTube? It's Zoom. The boot camp is done privately on Zoom. Let's see. Gold is at the right shoulder of an inverse head and shoulder seen on the 30-minute chart. What's going on, Kinder? Good to see you in the chat. Let's see what you're talking about here. You said gold is at the right shoulder of an inverse head and shoulder seen on the 30-minute. Okay, I see what you're talking about. You're talking about this bigger pattern here. Right, is what you're talking about. Yeah, man. I mean, that is right. You are right about that. We are technically creating this right shoulder still. Again, I personally like more upside. At the very least, just to where the neckline will be. But obviously, I want to run past that. Right? I think we have a ton of liquidity right where this neckline is, and I would love for us to really smash through that for sure. But yeah, that's a good catch though. Kinder, do you normally trade head and shoulders patterns? Is that like one of those patterns you love to go to? Because if you guys really follow me long enough, you guys know I used to be the pattern king. Right? That's all I used to do, was just identify patterns, whether they're head and shoulders, whether they're ascending pattern, ascending triangle, descending triangles were my go-tos. All that stuff. I used to love patterns, man. But then I got away from them just because I didn't want to focus on them too much. Let's see what we got here though. Tomorrow is the 3rd. Tomorrow is the 3rd. I mean the 4th. The 4th is probably gonna be the day we might have to reschedule. I honestly forgot we had July 4th. But I appreciate y'all telling me about that. Let's see. TopStep has the instructions for trade copier on the website for Tradeovate. Okay, there we go. I think he's going through Apex though, so it's a little different. Let's see. Oh, I gotta change my banner. My bad. I forgot I gotta change the banner. I'm tripping. I'm tripping. Now that the boot camp is going, now we're going back to our original quote. Check your emotions at the door, family. Check your emotions at the freaking door. That is our quote for the day, for the year, forever, for life. Because that's what we have to do. Alright, so let's see what we got. Again, family, I would love to see something like this for gold. I just want to see us push back down a little bit. If we can really fall down towards these levels, I think that would be a great opportunity for us to get involved. We just got to be patient here, though. Again, no rush whatsoever. So I'm waiting for this pullback on gold and then seeing how we react here for a possible buy continuation here. So we'll see how this plays off and how this forms for us. But that's what I really am liking so far. Let's see, my bad, MIA last week and a half. You good, baby. Good to see you back in the chat, man. Let's see, Apex has a link to a third-party trade copier on their site, and Tradeovate has a built-in copier when using their program. Groups and switching to the group instead of individual account. Appreciate you, Mike. Appreciate you so much. So, Gabriel, hopefully you're taking notes of these comments, bro, because they're all for you. Let's see, took a stab at gold. Okay, let me get a W in the chat. Family, you drop a W in the chat. We got JJ in the building, man. Family, drop a W in the chat, man. We got JJ back in the building. Let's go, let's go, let's go. Let's see, can you drop the boot camp link again? Okay. For Showski, bro, of course. I mean, the boot camp is already started. Listen, I'm not going to stop you guys from still, getting, purchasing the boot camp, because you can always get the recordings. But the boot camp already started. Tonight, we are on day 2 tonight. I mean, if you want to still buy it right now, you can, and you can still participate starting tonight. Again, you will get the recording at day 1 if you want it, but hey, man, it is there in the chat if you still want to participate in the bootcamp family. Again, tonight we really get crazy. We talk about news, fundamentals, sentiment, all that good stuff, so we'll see how it plays out. Let's see, not really, I just noticed it. Hey, man, that's a good eye, though. Let's see, we got George in the building. What's the word, George? What up, bro? After Surge Trader shut down on me, had to get set up again. Now I'm back with E8 Markets. Okay. Listen, man, I hope E8 treats you right then. Let's see, doesn't gold go down if Dixie is bullish? Are you bearish dollar, bro? I mean, not necessarily always. It doesn't always happen that way. Right? We have to think about correlations. Right? For one, I do think I do think the dollar could possibly correct some, but I am still liking possible upside here on the dollar. But I also do like possible upside here on gold as well. Now, how is that possible? It's very possible when you understand, right, that gold is not inside of the DXY, right? Although gold is affected by what the dollar does, especially when you're looking at it from the forex side of thing, because you're trading gold against the dollar. There are times where both are actually in demand, right? Where both the dollar is in demand and gold is in demand, which will cause both of them to go ahead and increase, right? It's not the same thing as if the euro was in demand and the dollar is going to have to do, it's always going to do the opposite, because the DXY, the basket of currencies that are made up inside of the DXY, are mainly the euro. 70% of it is like the euro and then the Aussie and then the yen and then other currencies. But the gold is not inside of that basket of currencies, right? Gold is not inside of the basket of currencies that the dollar index is measured by. So it's not going to always be correlated in that manner like we look at these other foreign currencies. So yeah, there are times where gold is bullish and the dollar can be bullish as well. In fact, that happens especially when you notice a lot of wars and stuff happen. That happens often, right? So I'm not opposed to both of them going in the same direction, just like I'm not opposed to when they're both going the opposite direction, because I understand the dynamics of it all. Um, but it is possible. So yes, there are times where they're correlated, and then there's times when they're not correlated. It happens, you know. It happens. Give me 1 second, y'all. All right, let's see. Let's see. W, always a W. Appreciate y'all. What we thinking, hawkish or dovish? I see we got the Jugman in the building. The Jugman in the building. To be honest with you, how do I feel? I'm hawkish in terms of what indices are doing. Just because I personally do not like shorting indices. Right, but when we're talking about hawkish or dovish, you have to understand what that really is referring to, right? That's really just referring to interest rates. So we're definitely not hawkish in terms of the Fed is planning on raising interest rates. And we're not dovish just yet because we're at a point where we're just paused. But we are closer to being fully dovish than we are being hawkish again. I'll tell you that much. Right, we are definitely closer to cutting rates than we are raising rates, because I don't think raising rates at this point is even on the table. So that's really what hawkish and dovish refers to. But let's see, how many miles you running today? Today I'm getting at least another 2 miles, man. Every day running 2 miles a day after the stream. Once I'm done with y'all family, and if wifey don't got me doing any other errands, I go for a run. All right, you know, we're doing 2 miles a day at this point. And it's been pretty dope. We've been consistently running for the past few weeks, 2 weeks now. I'll take it. Did you download that last clip I sent you? It was too big of a file to send straight up. You sent it in the Discord? I haven't checked the Discord. Okay, yeah, I see it. Yeah, I downloaded that one. That one is a long file. It's about a 5-minute video. That one is a banger though. Let's see, we got the Dixie Bowl in the building. My guy Jude in the house. What's the word, Jude? My guy Saint in the building. Always good to see you, my brother. Fitty, 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 bounce. Let's see what we get here. But you admit this. I won't repeat it. Move up to the left here one time. I like the upside on gold still, man. We're just waiting for the right opportunity here. This might leave without me. I might have to still wait for the pullback, but again, I'll be surprised if this gold doesn't continue to go bullish. Fitty, fitty, bounce. DMA, yeah, the rules. Let's see, that headset is cool. What headphones are these? These are the Astro A50s. The Astro A50s. I actually have two sets. Alright, when one dies on me, I replace it with my other one. I have this green, neon green colored one, which is the one you guys probably normally see on. And then I also have this black and blue one as well, which is pretty dope. But yeah, these are by far the best headsets on the market. Powell hasn't done anything in 2 years. Why change it up now? That's an interesting question. What do you mean he hasn't done anything in 2 years? What do you mean by that statement? Because in the past 2 years, we went from 9% inflation all the way back down to 3%. We've seen interest rates go from 0, 1% all the way up to 8, 9% as well. What do you specifically mean by Powell hasn't done anything? Because I would argue that Powell has done a phenomenal job with how he's handled everything that we've dealt with the past 3 years. He's done a really good job with dealing with monetary policy during COVID and then after COVID. They've done a really good job, especially with all the uncertainties that we've had. So I don't know. I think Jerome Powell has done a lot over the past few years, just with how he's been handling himself and truly navigating us around a recession and around everything else. It's pretty impressive. Because one thing I would never want to do is do Jerome Powell's job. Like, I'm good on being the chairman of the Federal Reserve. Like, that just seems like an extremely stressful position to be in, especially when you're dealing with what Powell had dealt with the past couple years. So I don't know. I gotta give credit where credit is due, and I feel like Jerome definitely deserves a little credit for how he's managed this. I say I like to see Dixie take these lows and look bullish after the open. Yeah, I would like to. I mean, essentially what you can see on the screen here for the dollar. I'm similar. You know, I would like to take out 105 400s on futures, or not even, but just on the dollar. Fall down into these levels and then possibly go ahead and continue going higher here. I think that just makes the most sense. I really want to see what gold does here at these levels, because this could give us our play here. We are about 13 minutes out from the open, by the way, family. We do got Jerome Powell speaking in the open, so that's gonna be interesting. I still like this opportunity here on gold. I still like the possible buy situation here on gold, even with Powell speaking, but you just never know with what he's gonna say. You never know what he's gonna say when he opens his mouth. But family, go ahead and smash the like button one time for your boy. I appreciate you so much. Smash the like button one time for me. Thank you so much. Let's see what we get here. Let's see, family. Still watching, man. I want to see what gold does here. I mean, family, what position are you guys in right now? What positions were you guys in? Do you guys in any position right now? Who took some trades already, family? Who's in some current trades right now as we speak? Let me know in the chat. Who's in current trades right now? I'm just interested to see. Kind of the piss with the actions on screen. Let's see what we got here. All right, indices. What we doing? What we doing? What we doing? What we doing, nasty Nasdaq? Nasdaq is still trying to push up here. Again, I am a fan of more upside here on indices. We did just have a very nice reaction off of this support. Yeah, I like the upside. I like the upside. Same thing with like how gold looks. Right? If we can get a push right back into this fair value gap on the 5-minute time frame, we might be able to get our trigger line entry play. Right? We might be able to get our trigger line entry, which is one of my execution tactics. So push back into the gap will get us below the 13. A break back above the 13 is our entry all day long. Same thing for gold here. All right, so gold and the Nasdaq guys are giving similar type of setups here that we got to just be patient on. Be patient on, be patient for, and see what we get. Now US 30 on a different, US 30 looks like it might be getting ready to go. Right, we had to spike up, broke structure to the left. We left behind this fair value gap. We now are trading in this gap. If this 5-minute candle that we're currently on right now has the ability to flip back bullish and close above our trigger line, yeah, I think US 30 is gonna run. We just have to be patient though. Again, we still about 8 minutes out, 9 minutes out from the open, but a bullish engulfing right here is definitely gonna lead to more upside in my opinion. Like this is what we want to see here. Like what we see here right now for US 30, how we had to move higher, broke structure. We seen price come back into the range. A flip back bullish here, a break above this 5-minute candle, close above. That's entry all day long. All day long, no second guessing it. But we'll see how this continues to form here. Again, I don't take trades though until after the open, until at least 9:35. So we'll see what happens. But this is exactly what we want to see here on gold, and what we also want to see on the Nasdaq. US 30 is already doing it. So we'll see. My gold stab stopped me out at break even. Okay. Family got funded yesterday on a 100K account. Let's go, family. Can we go ahead and drop some W's in the chat, man? Come on now. Remember what I told y'all, man. We got to celebrate each other, family. We have to celebrate each other, man. So big shout out to my boy Gabriel. Got funded a 100K account. Let's go now. Come on now. Come on now, Gabriel. Let's go. Let's go. Let's go, family. W's in the chat, family. Let's support one another. Come on. Celebrate others how you want to be celebrated when it's your time. Right? That's what we got to do here, right? Celebrate others how you want to be celebrated. Because you're going to attract that moment into your life. Promise you. Promise you. So we'll see how yeah. Super shout out to you, Gabriel. Let's see. I'm looking at oil potential sell where it's at now for oil. What's oil doing? I mean, oil is... Oil. Sure, a sell on oil might actually not be the bad idea here. This oil sell might actually not be a bad idea here. I ain't gonna lie. We are retesting pretty strong structure points. We're starting to see the market react bearishly off of this, showing signs of weakness right now. All right, strong candle, strong volume behind it. Yeah, I wouldn't be surprised if this does actually go ahead and start to roll over here. If it can close like this, right? If we can get this closure, this 1 hour, 30-minute closure the way it's at now, right, where it's actually a full an actual engulfing candle supported by a lot of volume, I wouldn't be opposed to that at all. I think there is a good chance that that does actually roll over. All right, so let's see what we got here. Again, we're still waiting for gold, family. I really want to see gold give us a little bit of a pullback back down into this level around 23.33 based on futures pricing. So hopefully we can get that without it trying to leave without us. Like, that would kind of suck if it tries to leave without us, but come on now, give us a little bit push lower. Give us a little bit of a push lower, gold. Don't try to leave without us. Come on now. Let's say a big appreciation to all you guys that are showing love to all of our family members. You guys are amazing. I'm waiting to fade GU. What's GU doing? GU is trying to push up here as the dollar's trying to push down. GU, yeah, man. I mean, trading currency pairs, guys, has probably been annoying. I'm not even gonna lie. How many of you guys are actively only trading currency pairs? Like, your really focus is on euro, Aussie, pound, dollar, GBP, JPY. Because I'm gonna be honest, like, trading currencies against the dollar have been so annoying. Like, I'm not even gonna lie. Like, just look at these pairs and tell me how this looks good. Right? Like, look at Euro USD. Right? Super choppy. Super annoying to trade. This is a 4-hour time frame, right? We haven't done anything for the past 2 weeks. AUD USD has been in a range for the past month. Super choppy. Super annoying. GBP USD as well. Super choppy. Super annoying. Right, like all these dollar pairs, man, these things have been so annoying to try to trade. I don't know how you guys are even dealing with it. I'm just being honest, bro. These things just look disgusting. But with that being said, I'm not opposed to GU, giving us a play lower here. I do think that these lows that we left behind will eventually get taken out. It's just a matter of where we're going to be selling from. Right? Are we going to be selling anywhere within this higher range? Probably. I mean, that would make the most sense, right? Sell at a premium level. But are we going to get a slowdown in price up at these levels? That's what we really got to just see. But I do want to see this thing eventually roll over to the downside. That is a fact. I do want to see it. Let's see. Let's get this dub. Absolutely. Let's see. I'm in 6A from last night. Good old 6A. Yeah, see, this, I just don't get it. This is so choppy. This is so annoying to me. I wouldn't even want to trade anything like this personally. And it's like, it's not even like, the only thing that's good about this is that your risk is going to be so small because your stop loss is going to be microscopic compared to all these other pairs. But like, this is just so choppy, so annoying to trade. But hey, man, hopefully that goes for you. Let's see, EU only. That's how I used to be, right? I used to really trade EU heavy, right? Because I focus heavily on the dollar, so I would just always trade EU because I knew it did the exact opposite. But yeah, we'll see how that goes. Let's see, me and getting killed. Yeah, I've been doing Bitcoin and I'm thinking of switching to oil. Those are some volatile pairs, man. As long as you can handle the volatility, absolutely do your thing. I've been staying away from Dixie pairs for the most part. I'm telling you, that might be the best play with all this choppiness that we have here. Only if the Dixie goes bullish. I hear that. All right, let's see what we got here, family. Again, we are still about 3 minutes out from the open. We do got Jerome Powell that's also going to be speaking here at the open. I want to see... I do want to see... Let me see. I do want to see if they actually are going to live stream his conference. We we might be able to just participate and watch a little bit. Let's see if I can find a stream. And now I'm elevated. Let me see what we got here. I'm on my phone. Because like this is not do to me. Let me see. Jerome Powell live today. Are they actually gonna live stream it or not? That's the thing. I don't know if they're gonna live stream this press conference or not. Put my 9 to 5 and now they're hating. Yeah, I don't know. I don't see anything as of right now for the actual live stream of Powell, but if one does pop up, we could probably tune in, see what he's talking about for a little bit, and see what makes the most sense. Yeah, because I'm not seeing anything over here. All right, we'll see what's up. We shall see what's up. Made a million, I'm motivated. All of my haters. Alright, let's see. I love the Dixie. We all know. Trust me, we all know. We all know, buddy. Come on, NASDAQ. What are you trying to do here? I'm gonna set an alert here on the NASDAQ as well. Set an alert on that bad boy. Alright, so we do got the open here. We're obviously going to see a lot of volatility here on the open. This is why I don't play the first 5 minutes. But we're seeing initial spikes on NASDAQ, the S&P, US 30 is really not doing much right now. US 30 actually gave a very, like, look at this US 30 family. Like, what did I tell you about this? Like, this thing played out exactly how we wanted to, right? Push up, come back within the range. It didn't give the actual signal, but then look at this close. Look at that strong move. Let's see how this stuff continues to play out here, family. Again, I would like the NASDAQ to come back down into this gap, and then from there, give us a play, or come all the way down to the liquidity pocket at the lower end, and then give us a play. Like one of these zones, I think can give us, you know, a really good play to possibly go back bullish here for the NASDAQ, if it can push down for us. So we'll see how this plays out. We'll wait for that. The S&P as well looks like it's probably going to start to follow the NASDAQ. US 30 is also now spiking. We'll see how that goes. Gold is trying to come back a little bit. If we can get gold to fall, that'll be nice. We need gold a little bit lower here. 23.33s for gold based on futures pricing would be phenomenal. Let's see, the dollar itself. The dollar is becoming more choppier down at these lower levels. Again, I want to see us take out this low right here, 105.380s. A sweep of the 105.380s is warranted. After that sweep, we could possibly look for some buys off of that sweep. Keep us right back in this little choppy trend that we've been in. I'm not opposed to that at all. But we'll see how this continues to play here, family. But we did get the open. We did get the open. Now he's got to be patient and wait for the right opportunity. The NASDAQ is still pushing up higher, though. The S&P and US 30 are all pushing up higher. So they're all running right now, which is kind of interesting. These things are all starting to run already. Let's see what we got here. I hope we didn't miss this trade, though. I hope we ain't missed the trade, though, because this thing is moving. Let's see. Do we have... I'm still trying to keep my eye out open for Jerome Powell as well. I just don't know where he's going to be speaking at, but give me a second. I wonder when he's going to start opening his mouth. Let me see what me Kevin is talking about over here. Murder. Let me see what we got here. Oil setting up nicely. Oil, yeah. I mean, I like how oil is setting up, man. That is a nice strong close too. Again, I think there is a very big possibility that oil does start to fall from these levels. So I'm not opposed to that. Yeah, gold looks still solid. Nasdaq is pushing. The S&P, all the indices are finally moving in unison, which has been very rare lately, where they all been moving in unison on the open. They typically do the opposite for some reason, especially US 30. US 30 always has a mind of its own. While everything is flying, US 30 want to fall. Like what? Like make it make sense. Boom, boom. We be murdering. Yeah, this Nasdaq US 30 is pushing right now. Nasdaq is flying. You're not even gonna give us no pullback here, huh? We're gonna have to be patient today, family. Let's see. I've been in gold buys. Yeah, I mean, I like it. I like it. I'm just trying to fine tune my end. I'm trying to be greedy with my entry. So I would really like for this to pull back. But if that causes me to miss my trade, it's definitely gonna be a little annoying. But it's all good. We still got plenty of time throughout this session, man, to get some. Let's see. Good morning, fam. I am in a NAS long from 19738. Okay, now talk to me nice. 19738. So you must be trading Forex, huh? You must be trading them Forex pairs. Yeah, you got to be trading on the Forex side. 19738. That's right before the breakout. That's not bad, man. That's not bad. 19738. That's probably like ran this little retest back down. Yeah, that's not a bad play right there. Not a bad play. This thing is moving nicely for you. Let's go. Hopefully that continues to run, man. Nas did freeze on your Nasdaq too, bro. Let me check, cause I know you be sending the markups in the markup section. I don't know if you did last night, but let's go. Y'all been cooking up. Yeah, I'm still patient. Let's see, got in for 10 pips and out. Okay, Devani, let's go. Listen, we celebrate the wins here. We'll take that. We'll take those 10 pips and got out. Hey, man. Let's see, I got in on Nas buys at 19,981. Let's go. 19,981. Oh, you I got in right before we started pumping. You had got in right before the open. Or like right at the open. Okay, Carlos, I see you. I mean, listen, man, if we're following the rules I've been doing, you grabbed your 20, 30 points, man. You grabbed more than 20, 30 points here, so it's not bad, man. We gonna take those dubs. Listen, I celebrate y'all wins as if it made my wins, man. Even if I'm not in a trade, I'm gonna celebrate y'all wins for y'all. I'm gonna be y'all biggest cheerleader. I'm gonna be y'all biggest cheerleader, fam. So send the wins in the chat, man. Whenever you guys take trades and you guys are in profit, send me them wins, baby. I'm trying to celebrate with you. We gotta have controlled celebrations, though. Right? One thing that we spoke about on last night's call for the boot camp, right? One thing that we spoke about was, you know, having the ability to stay in the middle, right? Your emotions being controlled in the middle, right? Because I spoke about the negatives of being overly excited, being euphoric. The negatives from that. But we also spoke about the negatives of being pissed off and upset and mad. Right? We have to be able to find a common ground. And it's okay to celebrate yourself as a winner when you win, but don't let it get too carried away where you become overconfident. You become too euphoric because now your ego starts to come in. And I promise you, your ego is your worst enemy when it comes to trading. So yeah, absolutely, man. We got to celebrate the wins, but we can't let that celebration get to our head too much. We're just becoming real true degenerates. Can't get too high, can't get too low, family. Can't get too high, can't get too low. Come on now. Let's see, closed Nas at 19,820 from 19,726. Let's go. Jama, you are cooking up. Yeah, NASDAQ is still pushing. Sheesh. So is everything. Gold is pushing too. Gold is leaving without us. Gold, don't do it. No. Do I have a sound effect for that? Oh no, wrong one.
Where'd you find this?
No, not that one. No, not that one. No, not that one. No, not that one. I don't know. I don't know where I put my sound effect for it. I don't know, man. I was gonna have a cool sound effect for it, but I can't find it. Let's see. Might take another entry at the 20,000 price level. Hey, listen, man. I'm still being disciplined myself. I still want this to give us some type of a pullback. Like, give me some. Like, I'm not opposed to taking like just a close of these candles, but you guys know I like to wait for these pullbacks, man. But yeah, I'm not. These things look like they're ready to go. Let's see. I'm on gold at 23.27 based off trade locker numbers. Okay, Kayla, I see you. 23.27. Trade locker will probably be closer to like over here based on like the forex pricing. Yeah, man. Hey, let's go, Kayla. Big celebrations. You win profit. Let's get it. Come on now. Come on now. Let's see. I'm on ego and self-doubt is biggest enemy. Absolutely it is. Absolutely. Let's see. Been swinging pound Swiss since June of 21. What are we talking about right now? Like, what are we talking about right now? You said since June 21, you have been swinging this bad boy. So since over here, you have been in buys? Come on now, King City. Entry at 1.2718. Yeah, so literally right around this level. Okay, King City. Damn, you are a real holder, man. You have been holding this thing for the past almost 2 weeks, 12 days. Currently floating around 170 plus pips of profit. You eating, man. You eating. You pay for my dinner today or something? Like, you over there eating, King City. Let's go. Let's see. Not that 5x. Slight pullback on the 2-minute time frame. Hey, man.
God. No, God, please, no.
Yo, I have this sound effect,
God.
though.
No, God, please, no, no.
I wonder what I did with it. Where did I put that? Did I delete that sound effect? I know I have this sound effect somewhere because I have this exact same one. That shit is so funny. I just don't know where I put it. I just don't know where I put it. All right, but let's see, family. Again, obviously we're seeing what these pairs wanted to do, you know, as of right now, right? We're seeing strength on gold. We're seeing strength on the indices. I mean, across the board, all three of them are just pumping right now, pushing pretty hard too, which is cool. But now I mean, there's nothing I could do now. Like, would you guys expect me to just jump into a trade up here? Like, nah, right? There's nothing that we could do at this point unless you're trying to fade these indices, which I personally am not a fan of selling indices. So I do not want to fade this. But these things are pumping, bro. Holy moly, guacamole. Close down and done for the day. That's what I'm talking about, Carlos. Make it easy, man. I'm still over here searching. I'm still over here trying to find some, and you already done for the day, man. Come on now. Come on now. I like it, though. I like it. Come on, Gold. I got bills to pay, bro. I need this trade, bro. I got bills to pay. I know some of y'all feel the same way. Like, yo, come on, man. Like, it's dope that other people ate some money, bro, but I got bills to pay, bro. Like, come on, let me get this. Let me get my entry real quick. Please. 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 Yo, the euro is flying. Aussie is flying. Damn, the dollar really is still losing strength, huh? Yeah, I mean, the dollar's in the area that I wanted it to get into, to be fair. Right? I told you I wanted to see the dollar take out this low at 105.390s. And now within this area right here is where I would like to see demand for the dollar pick back up. It could be where we're currently at, we start to see it, or it could come all the way down to the bottom of this range. We might stay within there for a little while before we start to make this move higher. We're going to have to see how this plays out, man. But this dollar weakness is definitely playing a major role as to why everything else is flying. Gold is flying. Foreign currencies are flying. Indices are flying. So that just shows how much weakness the dollar has right now. The dollar is definitely the weakest pair right now. This thing is getting smoked, causing everything else to gain massive strength. And gold is just not playing fair right now. Gold is just not playing fair right now, bro. Like I told y'all, man, this closure right here on gold looks so good. 1 hour engulfing candlestick supported by bullish volume in an already what I consider bullish market. Yeah, absolutely. This thing is money. This thing is going nuts. So unless we get a pullback, family, on some of these pairs, man, it might be a no trade day for me unless we get some of these pullbacks. Because there's nothing I'm trying to force. Let me look at some other things. What we got here for GJ? I'm a big fan of buying these yen pairs, though. I'll tell you that much. Like, imagine if we bought GJ down here at 2020, 2021, 2022. Like, this thing has been nothing but going bullish. This thing has been flying. Like, this is a major move. I mean, we can even just go from this year's low. This year's low was around here. This year alone, GJ is up over 2,000 pips, 2,500 pips alone just this year. 2,500 pips is crazy. Imagine 2,500 pips on a standard lot, 10 standards. And that's what most of these yen pairs look like. Like, we can go to the yen side of things. Like, all these yen pairs look like this. UJ, GJ, NJ, EJ, AJ, CJ, like all J's all look like this. And that's just because the big homie, or it's not even a big homie, the little homie, the yen's been getting walloped. And nobody on the call that's been here long enough should be surprised by what these yen pairs are doing, because we talk about it all the time. We talk about it. But these things are going nuts. So with that being said, I want to continue to buy these yen pairs. What did we see the market do essentially overnight? We had the market create this range, right? During London session, we took out sell side liquidity during London, and then immediately started to buy up. I mean, for all you ICT smart money traders, like, this is like a bread and butter play right here. Even for anybody that trades, maybe DeLorean, this is a bread and butter play right here. For anybody that trades, accumulation, manipulation, distribution, and all those cycles, right? For anybody that understands any of those things, this is like a bread and butter play right here. Right? We have all this accumulation that happened during Asian session into London. London session opened. We ended up manipulating price to take out the lows, grab all this sell side liquidity. Then the market immediately shifted and started trending higher to take out buy side liquidity. Like, this is like a picture perfect play here. I want to see continuation to the upside off of all this. I honestly kind of wish we would have noticed this last night. Like, this was a crazy play. Like, catching the entry down here. What? 5-minute engulfing and fresh liquidity supported by buying volume. Oh my God, that would have been a beautiful setup right there. That would have been spectacular. That GJ looked crazy. Let's see what we got here now. I'm 10 pips from passing my funding pips challenge. Let's go, Jama. Let's go. Gold just don't want to give an entry today. Yeah, nah, gold is going nuts. Unless you took the entry on the close of the 1 hour candle. Which probably would have been the only thing I would have maybe considered, which is taking the close of the 1 hour. But I was still waiting for the pullback. This thing just went nuts. It'd be like that. I see we got AJ in the building. No worries, AJ. What's the word? I was about to blow my account on US 30 sell. Had me in big drawdown. Sheesh. Sheesh. That's tough. Hopefully you were able to navigate out of that drawdown, or at least take a smaller loss if you did take a loss. Or hopefully you're back in profit. Hopefully you held that thing and you're back in profit. I don't know. I don't know what your situation is, but hopefully it's a positive one. All right, but good morning, AJ. 1,200 secured on NAS. Oh my gosh. Let's go. Another round of applause for the chat, man. Come on now. Another round of a freaking applause for the chat. Let's go. I love when I can celebrate, y'all. I swear I do. I swear. 1,200 is a beautiful freaking day, too, by the way. Let's not get it twisted.
Where they would wind up in equal.
Let's not get it twisted.
You can see the labor market
All right, but family, we do have
appropriately so, and we're watching it very carefully. But it doesn't look like
we
that's,
do have
it
Mr.
doesn't look like
Powell
it's heating
speaking
up
right
or
now.
presenting a big problem for.
So I'm gonna leave this up
inflation
for a
going forward.
little
Indeed,
bit.
it looks like it's doing
Again, I'm
just
not gonna. I
what you
don't
would
plan
want
on
it to
being
do,
on
which
this
is to
too
cool
much,
off
but we
over
are gonna leave it
time,
up a little
not
bit
quickly, not suddenly, not steeply.
so that
That's
we
kind
can
of
see
we've
what the
been hoping
vibes
to see
is.
and have been seeing. So, and you know, services generally are, they're such a mixed bag, particularly non-housing services are a mixed bag. Some of what you're seeing is catch-up inflation from inflationary pressures that happened earlier. You know, that's true with insurance. It's also true with housing services inflation, where you've got some pent-up rent increases that have to work their way off. It turns out it takes
Let's
more
see
than
what we
1
get
year
here,
for that
man.
to happen. It takes several years. So we see all that in train.
Tesla's full breaking above 221 now. It's above 222. Let's go.
Let's
This
go.
year or next
He said, "Let's
year,
go."
or maybe late next year, but
Yeah,
in the year
Nasdaq went
after. The main thing
crazy,
is
bro.
We're making real progress.
Can you keep cutting President Lagarde if he keeps holding?
Blame him.
Does it make it harder?
Well, look, you know, I'm going to give you the conventional response because that's the conventional question you ask me. We do take into account the spillover impact of whatever is decided by other esteemed colleagues. And obviously, my esteemed friend, Chair Powell, is one of those. So we take that into account, but we also determine, you know, our monetary policy on the basis of what we see in our economy, and we look at the data that we get, the impact that multiple factors have on our economies and its numbers.
Does it matter for you, President Campos, what the Fed does next?
We'll remove my
Well,
face.
I
real
think
quick.
it matters to an extent, but I think there is one point that is worth mentioning, which is more recently we've seen a sell-off in some of the EM, and especially the EM that had more. There were like more the best cases for investment. And you see that this is being explained with local news. But when you have a lot of sell-off,
Nasdaq going crazy. Yeah, Nasdaq is going nuts.
News,
I'm not gonna
you
lie.
have to ask yourself if there is a more fundamental factor driving that. And I think there might be. It's difficult to make the case right now, but definitely what we see now
Gold is going
there is more risk
crazy.
premium
Oh my
in a lot of the
gosh.
emerging market countries.
Gold
And
is going nuts
it was
too.
very synchronized with the long end of the US curve, and that correlation broke. So we've seen the last couple of weeks that even though the 10-year yield is more or less stable, even actually going a little bit lower, we saw a bit of a sell-off in emerging market countries. And I think that has to do with the fact that as you go
Damn, gold.
for longer with higher rates and much higher debt, you start extracting liquidity from the market, and eventually you are repricing that liquidity. It could just be a temporary adjustment in EM, or it could be the beginning of a more profound movement. We need to wait and see. But I think the correlation between the U.S. Treasury and some of the EM has been broken in the last couple of weeks. And I think we should pay attention to that.
What about the fundamentals in emerging markets? Because the economies seem to do better during this hiking cycle than they have previously. Why do you think that is? And does it continue?
That's a
I
good
think
question.
most EMs did a better job in terms of, or at least an equal job in terms of anticipating the process and starting the hiking process. Also in the fiscal part, on average, emerging market countries spent more or less 10% of GDP facing the pandemic. Advanced economies spend a little bit more than 20. So I think there is also this thing which didn't happen in the past, which is by and large, emerging markets were able to deal with the pandemic spending less. And actually, when you look at the fiscal post-pandemic, emerging market continues. It's not the case of every country, but continues to do a little bit better. So I think that also change the dynamics. And one of the things, I think, the independence of the central bank and the maturity that a lot of the central banks have gained in emerging market proved to be very useful during this process of the pandemic.
Some quick notes that I'm just watching in the market right now. So I'm watching the Qs top out right here. So this is a little bit of a warning. I didn't hear J Powell say anything bad here, but I'm watching the Qs top out a little bit. I'm watching BTC top out a little bit, all within the last about 7-8 minutes. I've watched Nvidia top out a little bit. Tesla keeps going, which is good. Little on the low momentum side, so you do have a risk of a big red candle there. But so far, so good. But those are some things that I'm watching right now as I'm listening to this event.
Look at, we do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings, and now a slight softening in unemployment in the form of wages. You see demand coming down, not just the supply that we're getting, but also demand coming down. You also see the effects of high interest rates in the housing market and in some other interest rate sensitive things. So you see that, and I think, I do think that restrictive policy is working hand in hand with this broad supply side recovery we've had, where we've seen the unwinding of the shortages and bottlenecks from the pandemic. We've also seen a recovery in labor force participation among prime age individuals in the U.S., and then some immigration, which has also been a positive supply shock. So we've seen all those things work together to give us, really significant declines in inflation. At the same time, we've got a strong labor market and growth. This was it's a great outcome for the people that we serve, and it's one that we want to do everything we can to foster.
So why not just cut rates to protect it?
It's what I said earlier.
Is it a bigger risk? Sorry, I'll rephrase. Is it a bigger risk that you cut prematurely and inflation stays sticky, or that you wait too long and the economy loses more momentum?
That is the question.
That is the question.
Our answer to
that is the main question.
We serve a dual mandate, right? And these two things are embodied in that mandate. The risk on the inflation side is that you move too quickly, inflation comes back, and we didn't really solve the problem. And then we have to go back in, and that would be very disruptive to the economy. So the other risk is that we wait too long. We understand that, and the labor market softens too much. Perhaps we lose the expansion. So needless to say, we don't want to do that either. So, but at the same time, so we've got to balance those two. And again, given the strength we see in the U.S. economy, we can approach that question carefully. But as I said earlier, though, you see, a year or so ago, we were talking about inflation, and our framework called for us to focus on the variable, the mandate that is further from its goal. That's not, they've come back much closer into balance. And a good way to see it is the beverage curve analysis that everybody talks about and looks at. We've come straight down the beverage curve, but you're really getting to that place relative to job openings and hiring rates, where traditionally the beverage curve is flattened out, which would mean higher unemployment as a result of further declines in job openings. So you can't know that with precision, but it's very much understood by us that we have two-sided risks and we have to manage them.
So what about the recovery in the Eurozone, President Lagarde? It's
Let's
also
go,
been pretty resilient, especially on the unemployment front.
I got freeze on
How
killing
confident do you feel in sticking this soft landing?
Well, we reached a level of confidence back in June when we decided to actually cut rates by 25 basis.
I want you guys to look at this on the screen real quick, right? This quote: inflation could get back to target late 2025, early 2026. That is crazy. They're not expecting to. That is crazy. That's so far out. I wonder why they think inflation is going to take that long to get to where it needs to be.
We're navigating in this universe of one risk versus the other.
I'm a little watching this market again. Bitcoin just gave another little red candle here. We got the JOLTS data coming out in about 3 minutes.
Yeah,
okay,
Bitcoin
remember,
is falling
we're going
harder
to
now.
want ideally a number that's under 8, but not so far under 8 that it's recessionary. So you want to be like 7.7 or 7.8, somewhere around there.
Of wages, whether it's the sort of on-time data or not, all of that has to be taken into account and analyzed in details so that we can feel really confident that we can go forward.
At the same time, there are also political risks. Certainly they're front and center. It was nice of all the authorities to make elections all happen this week, certainly in France and in England. President Lagarde, is there anything the ECB can do to shield the rest of the Eurozone from feeling any negative impact from a divided government in France, or from whatever the result is of the French election, in a negative way?
I thank you so much for your question.
It can't be a surprise.
Because I'm not going to comment on the political situation of any of the member states, particularly those that are facing elections at the moment. But, you know, obviously, the European Central Bank has to do what it has to do. Our mandate is price stability. Price stability is obviously relying on financial stability, and we are attentive to that because this is part of our job, and we will continue to do so.
Does the rise in French bond yields look worrisome at all?
You know, these are the things that we monitor. This is part of the job. It's, you know, it's not particularly at this point in time. We do that.
Yeah, it's
all the
impossible
time.
that Sarah Eisen pisses everyone off. It's not possible. She doesn't piss me off.
Hard for the central bank's independence in Brazil, and yet now you are the subject of many attacks from President Lula, and so I'm wondering how you're dealing with that.
Attacks from me?
No, no. No, President Campos. Attacks from President Lula. I think he called you an adversary and an enemy.
Yes, well, I think as a central banker, we have to get away from the political arena and try to...
About 1 minute to Jolts. I'll read it out when it comes in. Things have kind of topped out a little bit right now. BTC topped out, though it's trying to recover. Q's topped out, also trying to recover. Nvidia topped out, trying to recover. Tesla topped out, trying to recover.
In his last year of mandate, we increased rates in a cycle that went from 2% to 13.75%. That's the biggest increase in rates in an election year in the history of any emerging markets. So if that is not a proof that you are independent and you acted autonomously, it's difficult to find another example like that. So I think all this narrative that the central bank has been political, I think we have to get away from that and explain what we're doing. And I think what we're doing has been very technical. The last decision was unanimous, and we now have 4 members in the board that were chosen by the current president. And I think what we need to separate it was what is the political narrative and what is the technical job that we need to do. And I think history will tell and time will tell that the job was done in the best we could do with the data that we had at hand, and that was in the most technical way, and it was done in a group of people that actually analyzed all the data and that worked very...
It comes in a little hot. 8,140,000, so a little less desirable for rate cut enthusiasm.
Yeah.
Any advice for him? You've been through
news
some
just came out.
Attacks from...
We're seeing an initial dollar spike here on the news, which is causing everything else to pretty much lose some steam as well from what they have initially on the open here. Indices really aren't reacting too much to that neither. Hopefully gold can come back down now and give us an opportunity here. That would be nice. But let's see what they keep saying.
And in particular, we're just focused on our goals and getting through that. And if we do that and do it well, I will say in the United States, there's very broad support for an independent Fed in both political parties on both sides of Capitol Hill and everywhere. I don't think that that's really in question, as long as we just are seen to be doing our job and staying on task at all times.
Can I say something?
Yes, please.
I think that there are countries where governors do exactly what Chair Powell said, and yet get blamed, criticized, and I think that for some it takes courage to do the job in addition to being a good, excellent technical expert.
But I do wonder if you're concerned, because your term ends, President Campos, at the end of the year, and it doesn't seem like President Lula is going to reappoint you. So do you worry about the independence of the central bank?
So first, I was never up for reappointment, regardless of who won the elections, and I've said that from the very beginning. When I helped design the independence law, I actually tried not to have the reappointment possibility in the law. And for me, the reason was I didn't want that the president of the central bank, at any circumstance, would have any incentives to bend his knee in order to have any kind of re-election. So that we need to make that very clear. Secondly, there is actually a risk premium down in the curve, and I think it has been elevated in the last couple of weeks as to an uncertainty of what happens when the next leadership or the next team takes place. But this in Brazil is done very slowly because the president can change 2 directors every year, and we have 8 directors plus the president. So right now we have 4 directors that were appointed by the current government. And the last monetary decision was unanimous. So I think what we did in the last decisions proved that the group is very cohesive in trying to find a technical solution for the country. So I understand there is a risk premium and there is always this uncertainty, but I think the group that we have, which is composed of 8 directors plus a governor, voted unanimously, understanding that that was the best for the country at that time. And so I understand that there is a risk premium, but I think with time that risk premium will tend to decrease.
There are concerns in the United States about Fed independence if President Trump gets elected. There have been reports that he's looking at that issue. Obviously, you've been subject of attacks before. What is your level of concern about that?
I am not focused on that at all. And that's not just a talking point. I really think that we just keep doing our jobs. I mean, the U.S. economy, we have 4% unemployment. It's growing at 2%. Inflation's at 2.6%. Let's keep that going. Let's do our jobs. History will judge. I think if we can keep things on that path, that's what I'm focused on. That's the only thing I'm focused on. And as I mentioned, I do think support for the Fed's independence is very high, where it really matters on Capitol Hill in both political parties, among the leaders and most of the following. And so I worry about getting the job right. That's what I worry about.
I know you guys don't want to touch politics, but President Lagarde, it does bring into focus the fiscal policies, right? We heard President Campos say it. There are concerns about the deficits in France, if the far right should win. There are concerns in the United States about the deficits. So I do wonder if you have something to say or to warn on the fiscal front as it relates to making your inflation fight harder.
Well, fiscal matters enormously, true. And it matters in 2 different ways from my perspective. It matters from a sort of conjunctural type of way, and thank goodness the European authorities have agreed on the fiscal governance that will take over after the Growth and Stability Pact has been suspended and now completely replaced. So there is a framework within which members of the European Union have to operate, have to control the direction of their debt, have to make sure that it is sustainable going forward.
I think she said debt, but it sounded like dead.
Have to keep their deficit on watch with enough flexibility, and that's the second part of fiscal spending that I'm concerned about, with sufficient of an impact of a focus on productivity, on growth, of investment that will be conducive to both. And my hope is that in addition to operating within the European fiscal framework, which has been agreed by all European members, in addition to that, countries will actually look at the structural changes that they have to either continue to have in their arsenal of tools, but also that they will continue to improve going forward, because I regard that as critically important for productivity purposes, which we are lagging behind and have been lagging behind for a long time. So
NVIDIA is somewhat bleeding here, by the way.
Expectations, as Roberto was saying, for Brazil or emerging market economies, but we're very concerned about the fiscal rules that have to be respected.
So is Bitcoin.
Within the European Union,
So
and
is
the
everything else.
structural reforms that will be conducive, hopefully, to productivity improvement going forward, because that's the only way for Europe to actually...
Yeah, productivity gets you out of debt and out of recessionary dynamics. Worth also noting, AMD basically gave up its entire run.
And transformations that we have talked about.
And I know you're allergic to fiscal policy, Chair Powell, but I have heard you talk about the unsustainable debt burden of the United States. And even lately, there's been a sell-off in treasuries after increasing odds that President Trump will be reelected, that there might be a sweep of either party. Doesn't that make you nervous when it comes to the progress?
I like whoever this girl is, man. She's crushing it with these questions.
More
I don't know
expansionary
who she
fiscal
is, but
policy,
she's doing a good job.
more deficit, bigger deficits, bigger debt loads?
So I'm gonna give you the traditional answer to some extent, and that is that we just know fiscal policy is a job for elected people. We're not elected people, so we don't comment on it, and particularly in advance of a presidential election, we're not commenting on anyone's particular policies one way or the other. I will say more broadly, though, the United States is running a very large deficit at a time when we're at full employment, and it just is, the level of debt that we have is not unsustainable. The path that we're on is unsustainable. That's completely non-controversial. I would have thought that this is something that should be a top-level issue, and you do hear this from a lot of elected officials, but it should be a real focus going forward, is how do we get back to a sustainable path, because you can't run these kinds of deficits in good economic times for very long. I mean, I wouldn't say, I can't really speak to the time, but in the longer run, we'll have to do something sooner or later, and sooner will be better than later.
President Campos?
Yeah, let's do a basic exercise. If you look at the total debt combined, just sovereign debt of US plus Europe plus Japan, that's 64% of the total global debt. That went, in terms of cost of service debt, it went from 1.1, 1.2% before the pandemic to around 3.3% right now. But then you added 25% of GDP to that debt, which was the cost of facing the pandemic. So we have a much higher debt and a much, much higher cost of service the debt. So I think there is an aspect globally that is the extraction of liquidity that cumulative will have an effect in the market that sometimes is not pricing correctly. And if you think about what we have to do right now, we have to pay for the cost of the transfer programs that we did. We need to pay for the cost of the green transition, which is somewhat expensive. We need to pay for the cost of the fragmentation, which you look at the surveys and it's very costly for companies and for governments. We need to pay for the cost of the low-income countries that spent very little during the pandemic and now need support. We need to pay for the cost of demographics. And there is a surge in consumption of energy that needs to be paid because of the innovation. So we have a lot of bills to pay. A lot of bills to pay. We are at the highest level of debt that we had in a long time. And I think it's sometimes I stop and I think it's time for us globally to think about a way to...
Gold came crashing right back down. Gold is actually falling pretty hard, family. Let's look at these markets real quick, and then we can continue to listen to these people speak real quick, but quick update on the markets, man. These things are falling. Gold came all the way back down. Now, to be fair, it fell right into the area that I wanted it to fall, to then start looking for some buys. But boy, with this much selling pressure, it's kind of tough. Yeah, I'm gonna need this market to show me a little strength here before I jump into this bad boy. Yeah, I'm gonna leave a little something. It is in the area though, like literally in the area I wanted to see the market fall to. But we gotta be patient with that one. We'll see what happens here. The dollar is really gaining a lot of strength. Again, doing exactly what we expected, family. Didn't I tell y'all this? Like, am I tripping or not? Told you I wanted us to get below this level, and then in this range, we can start to see demand come back in. Look at the dollar right now. In this range, we're now starting to see demand come back in. And this does look like it has enough strength or possible momentum come right back up to these highs. In terms of indices, at this point, the way gold reacted, I wouldn't be surprised if these start to fall as well. Something was said that kind of spooked the markets. I don't know exactly what was said that spooked the markets, but something was said that caused these markets to really turn around very, very quickly the way that they did. So I don't know. That's some interesting stuff though, family. But I definitely wanted just to take a look at that real quick. And now we can get back to our scheduled program.
We don't see that as a big threat. I think some other countries will have a different understanding of what this impact will be.
Yeah, I mean, there's also trade barriers that are going up. President Lagarde, tariffs. I mean, in our election, we're talking about potentially more tariffs. Are you seeing that in terms of growth and inflationary impact?
Well, we're not seeing yet more tariffs than what had been decided back, 8 years ago, and which was consistently maintained later on in relation to certain products. So that for the moment is stable. What is not stable at all is the number of protective measures. Occasionally, non-compliance with WTO rules, the level of disputes that are brought before the WTO, which is not in a position to resolve them because they are not equipped with the dispute resolution mechanism, and magistrates have not been appointed to that effect. We've had more than 3,000 trade protective measures decided in the last 2 years, and that is like 5 times what is the normal average of measures that are decided. So that's a concern, and it's a concern because trade has been fueling growth, and because Europe at large is not a small open economy, it's a large open economy, and trade restrictions are going to affect Europe much more so than other countries that operate without this degree of opening and vulnerability in a way. But the second reason I'm concerned about it is that typically trade is conducive to innovation. Innovation is necessary for productivity. And I think that the combination of reduced trade on growth and the impact of trade on the capacity to innovate and to improve productivity is a vulnerability for Europe, and one that we have to address very forcefully if we want to win this battle of productivity. So and it's not independent from inflation. I'm not getting away from my topic, but it's one that is clearly a concern on the horizon.
But and it could be inflationary. I mean, 10% across the board tariffs, Chair Powell, inflationary?
Of course, I'm not going to be scoring any potential political proposals which have been talked about. It's just not our job to do that. Also, almost anything affects the economy. Trade affects the economy, immigration, energy policy. Those are not our jobs. There are other agencies that do those jobs. We do maximum employment, price stability. So in our political economy, we stay out of that.
But it has implications for price stability, surely, and maximum employment.
Again, we're not looking to be, this is exactly what we're not looking to do, which is to become players on issues like tariffs.
Yeah, stand strong, Jerome.
I mean, literally everything. All these things affect inflation and jobs. But notwithstanding that, there are others in the elected government who are responsible for trade policy. We don't comment, that's all.
Understood.
Stand strong, my boy.
Back to your job then. There is this debate and among the Fed and other central bankers about where policy rates are going. R-starred, the neutral rate, what that rate should look like, and whether it's different after COVID. What do you think?
Can we go back to trade?
No. Sure. Please.
He just hates the fiscal questions.
I don't blame him. He should hate
I guess I would start
questions.
by saying that the thing that we write down as part of our summary of economic projections, and the thing that economists mean by R-stars, is a longer run concept. It's the rate of interest that would hold the economy at equilibrium at a time when we're at stable prices and maximum employment, and there are no shocks hitting the economy. So this is not the economy today. So the first thing to say is that when we're sitting in the boardroom in Washington thinking about whether our policy rate is the appropriate rate for this economy right now, we're not battling over what long-run R-star is, because this is a different economy. This is an economy that's still recovering from the pandemic. And so many forces are pushing it this way and that way, and there's really not a lot of precedent, so it's a very challenging time. But it's not, the question, the R-star question is a really interesting question, and that is, are we going to go back to the very low levels of neutral rates that we had in the recovery of the global financial crisis, or are we going to go part of the way back from today's high rates to that? And intuitively, most people think that we won't go back to those very, very low rates that we saw, during the global financial crisis recovery period. But we don't really know. I mean, the neutral rate has moved around, we think, by slow-moving, longer-run forces, demographics, technology, productivity over time, all of those things move it around. Ultimately, the balance between savings and investment. So it's a great conversation to have. But honestly, when we're looking at policy in the boardroom, it's how is our policy affecting today's economy, and do we think we're getting the results that we want? And by and large, in a world where this isn't a world of precision, we think we are. We're getting a gradually cooling economy, a gradually cooling labor market, progress on inflation, 4% unemployment, 2% growth. We're getting kind of what we would want to have. And so that's, I worry that some people, no one in this room, but some people think that the R-star debate is the thing that dictates our assessment of how restrictive policy is. It's really not. Unless you think that the long run rate is the same as today's rate.
I think that investors are trying to figure out, though, where you're going to end up and what the policy path looks like once you start cutting rates. And it becomes important then.
No, I agree. It does.
Yeah.
It's what will we discover to be? We'll find it empirically. What will we discover it to be? And I think there's a debate going on. There are people who feel very strongly that it hasn't changed and that it has changed, and ultimately it's unknowable. It does matter for the longer run. It matters for where rates will settle out, but it doesn't matter much for policy decisions today, which are the ones we're actually making.
I guess we want to know if there are like 10 cuts coming or 15 cuts. I mean, do you think, President Campos, it's changed post-COVID? Are you dealing with a different economy?
So the R-star story for emerging market countries is a little bit different. So for example, if you had a table of countries of Latin America, you would find that at least the models internally used by their own central banks.
I feel like markets are kind of like waiting for this to be done because BTC is not really happy about this. 62.2 right now, not great.
What is the short-term view and what is the long-term view, as Chairman Jay described? And I think for us it's more like trying to understand what is the structural reason for the neutral rate in Brazil to be so high, 4.5% real time is really high. And I think a lot of it has a lot of structural elements from the past, but it has intensified during the pandemic. And you could go and talk about the amount of subsidized credit. You can talk about the trajectory of the debt. You can talk about productivity. For example, when you look at productivity, there is one thing that not a lot of people talk about, which is in the need for raising money, sometimes the adjustment is done on the revenue side. When you do the adjustment on the revenue side, if you look at what's being done in emerging market countries and even in some advanced economies, you tend to go back and tax capital more than labor because it's very hard to tax labor coming out of a pandemic. If you tax more capital than labor, and this has already been happening for a while now globally and especially in emerging market, then you introduce another element that will bring productivity lower. So when you look at the causes of the neutral rate to be so high structurally, that's, I think, what we need to work on. And Brazil has done a lot of reforms. We have done reforms. And I think if you compare to other EM countries, Brazil was actually able to do reforms in the middle of the pandemic. We did the social security reform. We are doing a tax reform. We did the labor reform, all in the middle of the pandemic. But still, when you look at the efficiency of what was done, the end result seems to be that our structural rate is still our neutral rate, our star is still too high. And I think we need to go on and talk about what are the reforms that are needed in the medium term to make sure that we have a structural rate, a neutral rate that is lower than we have right now.
President Lagarde, do you ever see a world where we get back to near zero interest rates absent a crisis?
Do I think we're heading towards that? That's, in my view at this point in time, it's very unlikely, but it's not something that I would want to pass judgment on. What I can tell you is that when we start having that conversation that Chair Powell described perfectly well and that I would completely subscribe to, I would be relieved because it would mean that we are getting closer to where we need to be. It would mean that we do not have any shock suffered by the economy, nor on the immediate horizon. So that would be good news. But we are certainly not at this stage, and this is not the work that we do when we set our policies going forward.
One thing that's been moving fast and has the potential to impact economies is generative AI. And I know we started talking about it a little bit.
Oh, we're going on to the AI discussion with the central bankers.
But things have moved, President Lagarde. So how are you thinking about any impact on growth or productivity or inflation of what's happening in technology?
Well, Sarah, that's a subject for which we need another hour because there's so many questions about it. Number one, there has to be some regulatory framework within which AI and generative AI in particular, especially if it's in the hands of a small oligopoly of companies, is actually organized in order to protect a number of rights and protection of citizens. I would start from that, which is not where we are for the moment, although there are attempts to organize in a better way, as was the case with internet, on a global basis the use of generative AI. So point number one. Point number two, and I will let Roberto talk to that point because he's more of an expert than I am, the question of how much energy is used in order to test large language models is really something that is not often in discussion, and yet it matters enormously. Third, the impact that AI will have on growth, on inflation, on productivity, I think is yet to be determined. I think most people would agree that it will have an impact throughout the ladder of jobs in most segments of the economy, in areas where mechanical developments have not historically affected jobs in particular, and it will require significant amount of training and constant upskilling of people so that they can adjust to artificial intelligence, use it, and not be victims of it. I would add to that I think we at the ECB are using artificial intelligence, try to do it in a safe environment without being hostage to those companies that would like to have access to the most private of our data. So it does require a cautious management and enough control without preventing the innovation and the creativity that people can apply in the use of these tools.
You use it in models? How do you use it?
We use it in models. We use it in, whenever we need a lot of language mining and whether it's structured or unstructured data for that matter, we use it and we are constantly pushing the frontiers of that. But as I said, cautiously, because we need to protect data and we need to make sure that there is enough human judgment involved in the process of this use of artificial intelligence so that we are not either hostage to the mechanics itself.
Do you think that fears over generative AI, Chair Powell, rendering certain jobs or industries obsolete are legit? And is
obsolete.
Central bank can do?
I don't think we know. So you see this massive investment boom. You see, serious people in the private sector and the public sector. There's a sense of something big coming here. And it feels like what that will be is it will eliminate some jobs, it will create some new jobs. And the question really is for many people who will it augment their labor and make them more productive, or will it eliminate their job? And I don't think we know that. It's too early to say. There's not a lot a central bank can do about that. This is really a job for. We can supervise our financial institutions and things like that to make sure that that they understand what they're doing with all different kinds of technology. But also, like everybody else, we're meeting with all the experts and asking ourselves what will be the effects on productivity, on inflation, on growth, and will it be enormously displacing, and if so, of whom? One thought is that it'll be more people doing white-collar jobs who are writing press releases and things like that. So we just don't know. It's something we're investing a lot of time and effort. We're not using generative AI. We're very carefully looking at that. Other earlier forms of AI are in fairly common use in American business, and I believe we use some of that.
What about you, President Campos? I know you're focused on the energy needs as well.
Well, first, I think when you look at the surveys that we have, and we have plenty now on the use of AI on companies, what you have in terms of empirical evidence up to date is that the companies that use AI to enhance existing labor have had better results than companies that have replaced labor for AI. So that's something that we know. It doesn't mean that some jobs won't be replaced by others, as it was said. But I think what we need to understand is what we are seeing basically is an increase in the ability of processing data and storing data. So it's basically computer power and the ability to
Boring.
data. And that's very energy consuming. You have a couple of dimensions that you need to look in. You look to privacy, where is the limit, and what is the taxonomy of using this once it becomes a global instrument? What is the taxonomy of using this? Because you could be talking about data centers being placed in countries that have cheap energy to produce services for countries that have more expensive energy. So once you start crossing the frontiers, thinking about how you're going to do this movement globally, I think there's a lot of consequences, and one of which I think is you're going to have very unequal growth between the countries that are more on the edge of producing this technology and the countries that are not, and the energy consumption also be very unequal. So I think globally we need to look at how we're going to connect the dots and create more or less a taxonomy for this development to be sustainable.
In the minutes that we have left, want to do sort of a quick
It's almost over. That's a good sign.
of questions.
The market, I think the market's just gonna pump. As soon as this freaking event is over, I think it just moons.
What do you guys think?
Economies.
As
What
soon
about
as
the
it's
biggest
over, the
risk
market moves?
facing your economies? And I do wonder if they're the same or different. Chair Powell,
Gold
what's
is
the
in a
biggest
nice
risk facing
position
the U.S.
for it
economy
tomorrow.
right now?
I ain't gonna lie. Gold mooning, I wouldn't be upset
traditionally
about.
have said cyber risk to that because it's, you know, we know how to deal with credit risk. We know how to deal with lots of kinds of risk, you know, market dysfunction, things like that. But we haven't really had a big successful cyber attack on a financial market utility or a bank. And that's the kind of thing which I think is, you know, the stuff of lying awake at night. I would also, today though, honestly, really it is just the balance that we talked about, getting the balance on monetary policy right during this critical period. That's really what I think about in the wee hours.
President Lagarde?
Same thing.
Really? Really? Cyber risk?
I think, you know, I'm saying that touching wood, actually, and I wish, yeah. Because it's one, if you
Okay, get him off the stage so we can rally. Come on, wrap this up.
with which we interact a lot, sometimes much to their chagrin, but eventually to their satisfaction in the long run, I'm sure, because we supervise them carefully. But typically, that's a risk that they flag as one of their top priority risk, and on which I think we need to constantly improve the level of coordination, first, second, third line of defense, and best way to respond to those. Now, clearly, I'm concerned as a person more than as president of the ECB about the backlash that there is against the fight against climate change, and some would argue that it has nothing to do with...
Okay, once we get into climate change, it's usually a good sign the event's over.
Actually, not the case. It does have a ramification impact that we should be mindful about, but it's a risk that is there, and that will come to haunt us if we don't do much about it.
I thought you were going to say geopolitical risk. That's there too, right? Facing Europe?
Geopolitical risks as defined by
Nice PP.
Maurizio earlier on? No.
What the hell? Nice PP.
We heard a lot about geopolitical risk.
It's there, and it's just on the doorstep of Europe. When you look at this horrible war against Ukraine, it's a major risk which is out there and which is hurting those on the ground and the neighboring countries in particular.
What's your biggest risk?
Yeah, these markets look like they're
If you
really
look
about to
at
start
what
running.
markets price today, they will probably, at least for part of Yemen, especially for Brazil, the conclusion would clearly be that the main risk is fiscal. But I think that comes and goes, and it has to do with growth and productivity and a lot of the things. I think there is one other risk that I see, and it's not very tangible, which is the polarization that we live today. If we think about the amount of time that we spent on some social issues that are connected to polarization and that are not that meaningful to produce well-being of the society, I worry a lot about that.
Yeah. So if we're sitting here on stage in 1 year from now, which we hopefully are, the inflation rate in the U.S. will be
2%.
Mid to low twos.
That's kind
Nice.
of, we're mid-twos now.
Yeah. Well, we have 1 month at 2.6, and we had a brief visit to the low twos at the end of. But I mean, sustainably, durably underlying inflation between 2 and 2.5 is what I would say. That would be a great outcome.
Headline PCE.
Yeah.
President Lagarde, 1 year from now?
1 year from now, I would say low twos. We are at 2.5 latest reading, and as I said, bumpy on the way ahead,
you.
but yeah, low twos.
You've been closer to 4%, President Campos, right, lately? So where do you think you are in a year from now?
Pop it.
Well, I won't be in the central bank
Well,
a year
right.
from now.
Cut the mics.
We already
Cut the
established
mics.
that, yeah.
But I think that the work that's being done is very technical. I'm confident that we'll continue to be that way. And I think when you look at expected inflation today, I think it has a disconnect with the current inflation, and it has a disconnect with the fundamentals that we have in Brazil.
BitConnect?
So I'm confident that the future inflation will be lower than the expected inflation. In other words, I think what the market's pricing today is not in sync with the reality.
What about the unemployment rate? We're going to go full dot plot here.
Yeah. I'd be happy if it were just right where it is now. That would be a good outcome. Plus or minus a couple of tenths would be good.
Is that likely?
Yeah, I think it's reasonable.
Starting to rise.
It's moved up from 3.4. We touched 3.4, so we're up to 4, but 4 is still a very low level. It's been a long time since, the last time we were at 4 or below for this long is, I was a teenager, a long time ago.
Also, unemployment rate in Europe, it's been, what, healthy, 6.5%?
Historical low,
Yeah.
and I hope it stays there a year from now.
What's the unemployment rate in Brazil?
Well, it's close to 7% now, which is very low when you look at our history. I think probably will go up a little bit, but not too much. But I think what we need to look at is the participation rate. So we just published a study that shows that the transfer programs have an impact in the participation rate. Our participation rate was down and then it's recovering a little bit at the margin. And I think it would be very important to understand what is the dynamics of the participation rate going further.
And finally, Chair Powell, were you a 2-cut dot or a 1-cut dot for 2024?
No comment.
He ain't giving away none of his
Very much,
secrets.
all of you.
Thank you.
That was pretty dope. That was a good conversation. I actually like whoever that host is. She actually did a really, in my opinion, a really good job there. But family, I did take I had set a buy stop here on US 30 just because I think these markets are probably, now that this is over, probably are going to get ready to start pumping. My buy stop was triggered. It is a relatively very tight stop, just relatively below this 5-minute engulfing candle, just in case it don't work out. I want to get out very, very quickly. But yeah, this is pretty much the only trade that I've seen so far. Gold still interesting. The thing about gold is gold did exactly what we wanted to. Like literally to the T. Came right to where we wanted it to, and now it's starting to form the support. And we are starting to see a little bit of signs of strength. I don't even know if this US 30 is gonna hold that I took, but we're gonna play it out and see what happens here. But now that the actual press conference is over, let's see how the market really feels. Yeah, we'll see what happens. But I am in this. I didn't risk much at all on this position, family. But so we're gonna see how this plays out. But how you guys feel about that? How you guys feel about that call, family? I think it was actually really dope. Again, I'm a fan of the host. I think she did a really good job asking questions. Obviously, Jerome Powell and the rest of those heads of central banks do a really good job at not speaking too much, right? And because they don't want to spook the markets. But I think they also provided a lot of clarity. They answered a lot of questions, and I was excited to see that stuff, man. So, but what are your guys' thoughts on that, family? What are your guys' thoughts on all that right there that we just spoke about or we just listened to? Let's see what we got in the chat. See, we got Anthony in the building. What's up? I may or may not have gotten into a gold buy at our entry. I mean, we go see, man. Hopefully it runs. Again, I think like this is the area I wanted to see, price go through. So we'll see what happens. Abel, what's your thoughts? My thoughts for the entire thing was pretty interesting. Obviously, they touched on everything that has to do with the central banks. The one thing that really stands out is how quickly Jerome Powell was to tell him, like, listen, we don't want to touch on anything that has to do with political, because we don't want to seem that we are biased, as a committee, right? That's like the worst thing that the Fed can do, or at least Jerome Powell is, start to speak on things that have nothing to do with his job, right? Where his job is literally two things, which is to have stable prices and a strong labor market. Like that's literally the job of the Fed. Like that's it. Anything else after that is not his job. It's not his focus. It's not he's not focused on that, right? And when he starts to get into those talks where he's talking about fiscal policy, he can start to give away endorsements unintentionally, you could say, right? And I think that's what he's trying to avoid. So he did a really good job of, again, doing his part and staying away from it, and not really, falling for the trap. But family, let's see what we got here. We are in, again, this US 30 trade. 20 pip TP is right here, right? We came ever so close to the 20 pip TP, but we're going to hold this. And we'll see how this goes. Again, I am going to roll my stops just because we technically are at the 20-point TP. So I'm going to go ahead and just remove the risk off the table on this position in case it does come all the way back down. And if it hits me out at break even, then so be it, man. We'll call it a day on that and just deal with what we have. But as of this point, guys, we are up 20 points. As you guys know, whenever we're up 20 points, we are closing majority of our position. And we are going to let the remainder actually run. So beautiful, beautiful trade. Again, that's all we need to get, guys. A quick 20, 30 points, man, every day will absolutely allow you to continue to scale your account and grow your account, right? And that should be the goal, right? Is to consistently come in, get some trades that are going to consistently grow our account slowly but surely, right? And we did that literally in a matter of 5 minutes. We took a trade. We grabbed 20 points. Literally to the T, it went up to 20 points. Closed partials, and now I let my last little 2 contracts run. So I only had 4 contracts on this position as a whole. We closed out 2 at 20 points, and now we let this last 2 just run and see what happens. Right? It's either going to hit us at break even now, or it's going to continue to pump and run for us, right? But either way, we secured money. We secured money very quickly. All right, so I did get hit at break even, but either way, guys, it was a very quick 20-point trade. Like that shit happened in a matter of 3 to 5 minutes, not even. Right? But beautiful, man. That's all we need, man. I'm telling you, 20 points a day, family, keeps the 9 to 5 away. Especially once you start to really, build up the capital in your train account, you're going to realize how much those 20 points really do hit. Because right now on a smaller train account, it might not seem like it's a lot. Like, hey, but bro, I'm only making $2, bro. Yeah, but $2 on what size account? Right? $2 on a $100 account, that's still 2%. 2% a day is phenomenal. You can make 2 to 5% every single day consistently. You have the ability to make a shit ton of money here, right? And that's just a fact. So again, that's why we have shifted. We adjusted to our style of trading to only target 20, 30 points. We have just secured 20 points, closed two contracts, made some money. The other 2 did get hit at break even, but it's cool. It's still a freaking W day off of that. Let's get it, family. Let's get it. 20 points in 5 minutes. We'll take that all day long, baby. All day long and every single day of the week. Not even gonna lie. Come on now. Let's get it. Absolutely love this. Absolutely love it. Come on now. Trading is so easy, so simple, man, when you truly know what time it is, family, and when you adjust. All right, let's see. Sarah Eisen, financial news anchor for CNBC. Okay. Powell is not fazed by the political landscape. Every knee will bow before the almighty money printer. Absolutely. Let's see. She hosts Squawk on the Street. Nah, she was actually really good. I'm not even gonna lie. It's the first time I might have seen her before, but that's like the first time I actually heard her, host a debate, right? And that was I really like how she carried herself and the questions that she asked. She did at one point almost irritate, Powell with those political questions, but obviously she's also trying to do her part to get, clicks and sound bites and things of that nature, right? But she did really good. But other than that, though, family, man, I'm gonna call it a wraps after that. Again, quick 1 trade today, 20 points profit made here on US 30, which obviously is US 30, so it happened very, very quickly. But yeah, man, beautiful day, right? Just like that. 5 minutes in, 5 minutes out, 20 points of profit. And now we can go ahead and enjoy the rest of our day. Money was made, and we come back tomorrow and we do the same exact thing. Right? So, family, man, I appreciate y'all. Love you guys so much. For those of you guys that are a part of the boot camp, be on the lookout for an email. I will send you guys an email with the details for today's call. So definitely be on the lookout for that. And I look forward to really breaking all this stuff. Like the crazy thing is, everything that they spoke about today on this call, right? A lot of it might have went over your guys' head, especially if you're not really familiar with fundamental data or fundamental talk, the language, the verbiage. But we break all that shit down tonight on tonight's boot camp, day number 2 of the boot camp. So I'm excited for that. Definitely make sure to have your pens and papers ready, guys, because we're gonna be dropping so many bombs, so many sauce tonight, and you definitely don't want to miss it, for sure. If you want to be a part of this, there's still time. I ain't gonna stop you from going ahead and finding the link and signing up to the boot camp. You missed day 1, but I can send you to your email immediately. So the choice is yours. All right, click the link in the pin message if you want to join. And I'll see you guys tonight if you do. Family, I love you guys. Appreciate y'all, man. I'll talk to you guys all in the Discord, tonight on the call, or tomorrow morning. Let's get it, y'all. Have a great rest of y'all day, family. Love y'all. Appreciate y'all. I'm out here. Let's get it.